Imagine you want to buy an Instax Mini 11 Insta-Film camera. How would you pay for it? Well, you have two options, credit or debit. Debit means you use your own money from a personal bank account to pay for the item, whereas credit means you take a loan from a bank to pay for the item. So let's dive into how paying for this camera with credit and debit would work. The Instax Mini is only $67. If you pay using debit, then $67 will be taken out of your bank account. Super simple. But if you have less than $67 in your bank account, then the transaction won't go through because you just don't have enough money. If you pay using credit, then the bank will loan you $67 to buy the camera. And I know that sounds great. Doesn't the bank just care about me so much because they really want me to have this camera? Well, not quite. You're still responsible for paying back the $67 on your statement date. And if you don't, you'll be charged something called interest. Here's how that works. Let's say you miss your payment on July 24th. Now, in addition to the $67, you now owe interest based upon the APR, which is called the annual percentage rate. Let's pretend I'm Mr. Cerna and let's do some math. Oh, hey there. I just got back from my boxing workout. We'll use the average APR for credit cards as of last quarter, which is 16.27%. To calculate how much interest we owe, just take the APR and divide it by the number of days in a year. If we take 0.1627 divided by 365, we get a 0.00045 daily periodic rate. Multiply the daily periodic rate by the average daily balance, and in this case, that would give you 3 cents. Lastly, multiply this by the number of days in your billing cycle, which is usually 30. This comes out to 90 cents, and what this means is, in addition to the $67 you owe, you now owe an additional 90 cents in interest. And while that might not seem like a lot, remember, we only bought a camera. If you charged your credit card for other things like Chipotle and Crocs and Boba and Jordans, then you very well might rack up 20 or 30 or more dollars in interest per month if you're not paying off what you owe on your statement balance. And this is what I call money working against you. Now, despite all of that, I do actually recommend that you build your credit, but you need to do it slowly and responsibly first. After all, a great credit history and credit score is going to be needed for you to buy your eventual home. Here's what I recommend. Ask your parents to add you as an authorized user. This means that you can make purchases with their card, but ultimately the responsibility to pay the charges comes down to them. And under their watchful eye, they can make sure you're making responsible purchasing decisions that you can actually pay for. But if you know your parents struggle with this themselves, then completely forget what I just told you. That's all the time we have for today. Leave a like, subscribe, and don't miss the next video in the series, which is all about how to build great credit.